Hello everyone, and thank you for joining us. My name is Katharina Bauch, and today we're going to talk about Scope 3 assurance and what auditors are actually looking for. With the GHG protocol in the process of updating its standards and mandatory climate-related disclosures now very much the norm across Australia and New Zealand, making sure your Scope 3 data is audit ready is becoming more and more important for a lot of companies. And we know that can be sometimes feel like a bit of a minefield. So today we want to share some questions we've been asked and some common challenges we come across. And we also want to share with you what verifiers are really looking for during an engagement. To help me dive into the details today, I'm being joined by two experts from SGS, who are specialists in business assurance, including GHG inventories across New Zealand and Australia, and as well as globally. So we have Mark Crichton with us, a Sustainability Program Advisor, and Rhea, who is a Lead Auditor and Sustainability Advisor at SGS. Just a bit of quick housekeeping before we start. You will notice you're on listen-only mode today, and that's just to keep the audio nice and clear for everyone. However, we really want to hear from you. So if you have any questions as we go along, type them in the Q&A box at the bottom of your panel. Please make sure you use the Q&A box rather than the chat function, because in the Q&A box, all the questions will be saved. So in case we won't get through all the questions at the end of the session where we will address them, we can come back to you later on. We can't do that with the chat function. So Q&A box, please. With that, let's get started. And we will start with some questions for you. If you have joined our webinars before, you might know we commonly start with a quick poll. We have 3 questions for you in that poll. The first question is your organization currently measuring 100% of your applicable Scope 3 emission categories? Yes, most categories, partially. We started with the categories that are easier to start with, or we're just in the progress of mapping out our value chain and getting started. You can see the first answers coming in. It seems to be quite a relatively even split, maybe more towards either most categories or really just mapping out the value chain. Move to the next question. The next question is about your internal processes. How confident are you that they are clearly documented, really allowing auditors to follow your workings and check your internal controls? And this question came up because during the kind of starting of the assurance in Australia, like the first round there, this was sometimes a piece that was missing. But I can see you have quite moderate confidence, most of you, that your processes are very well documented, but maybe needs a little bit of improvement. That's quite good to see. And then the last question we have is if you have already started getting your emissions assured by a third party. You can see quite a few of you have limited assurance ready over your emissions, but also the other half roughly don't have it externally verified yet, or really just getting started with it. We'll close the poll now and let's get started. So, as I said, I'm going to start with a bit of Q&A, covering some questions we have been asked in the past year. And after that, I will hand over to Mark and Rhea, who will talk us through some global trends, help us debunk some common audit slang, and walk us through a typical assurance process, how it's actually looked like, and have some practical examples in there as well. With the first Scope 3 progress update released by the GHG protocol, we are often asked what to expect from this update. And a key thing to remember here is the original Scope 3 standard and guidance was published 10, 15 years ago. So that is really about aligning with and also setting new best practices that reflect how much the industry has matured over that time period. And you will find that the proposed wording aligns very closely with international best practices that we and a lot of you already applying to your GHG inventory. So I will cover here some of the key elements from the update, but my colleague Emily will also paste a more detailed summary of the changes as well as the full GHG protocol update into the chat shortly. So the new proposal requires that you cover at least 95% of your Scope 3 emissions. So crucial here is as well that the remaining 5% must now also be at least estimated so that you can justify that you're covering more than 95 or at least 95% of your emissions. So you can't just leave them out because they're hard to measure. You need at least to estimate them. And this proposed wording aligns also with the requirements that we're seeing in other areas, such as from the GHG protocol. They also want to see 95%. And it reinforces our own approach that we are following across our services as well. So not just in the corporate inventory space, the GHG inventories, but also if you look at life cycle assessment and EPD work, we always try to, if it's hard to get the data, we start by estimating. So don't leave things out, estimate it. And we can also help you with that. And if it shows up to be significant, then you can dive deeper into this. So to put it into practice, if you are a large manufacturer, tackling commuting emission might feel a bit daunting because of the high headcount, lots of employees, and the expectations that the impact is probably relatively small, so low reward for potentially a lot of work. So in that case, we would start with a conservative screening. So assuming every one of your employees drives 30 kilometers in a petrol car to work and back. So you need 3 variables, that's it. Petrol car emission factor, estimated return kilometers traveled, and number of employees. And if that then shows that your commuting emissions, let's say, are less than 1% of the Scope 3 emissions in total, then that high-level estimate is often enough. If it hits closer to, let's say, 5%, would likely move towards national or regional averages for New Zealand and Australia, wherever you're based, using free secondary data from the government, from government sources. They usually have like a typical commuting pattern that you then can apply to your employee numbers in this particular region. However, if you're a services company like us, the same category, employee commuting, could make up 10 or 30% of your emissions. And this then warrants a more detailed look and a proper employee survey, which comes with higher data quality. So this concept that I showed here also aligns with the proposed update to the GHG protocol, which focuses on aligning your data quality and how specific your data is to the magnitude of your emissions, and then enhancing the quality over time. This is also the answer to another question or rabbit hole we quite often see. Approach your GHG inventory with materiality in mind. Focus your effort where your emissions are the highest and leave lower impact categories with estimates. Even if you could improve them, even if you know how, focus on the musts first, be brave enough to leave them, and then potentially for next year, you can then improve your data quality on that one. And materiality is often one of the criteria as your auditors will apply as well. So I'm sure Mark and Rhea will touch on this and other criteria that they use shortly in more detail. And if you're unsure, it's always good to engage with your auditors early, discuss your planned approach with them, and get their feedback. My last takeaway, especially with the first round of climate-related disclosures in Australia, is that it isn't enough to just have a number. Auditors need to understand the process behind the number. They want to know that your, for example, financial controller extracts spend-based data from SAP 10 days after the end of the month. The extract is based on invoices paid to date, not received. That data is excluding GST in the local currency, and so on. So have a standard operating procedure and SOP in place that documents that internal process. And by documenting this process, you create an audit trail that gets your inventory ready for assurance. And saying this, apply the same approach to other elements as well. For example, your calculations, document all the steps, list any assumptions. If you use Excel, use formulas, link your data. Again, this gives your auditors a trail to work with. In addition, this also helps your colleagues to understand exactly what their actions and responsibilities are and when their input is needed to provide data to you. And quite often they have really good insights as well that will help you in your planning and your timeline mapping. And it makes it much easier to follow the same process year on year or when new staff is joining the team. And with this, I'm now handing over to Mark to take us through some audit trends and some audit lingo.
Thank you, Katharina. So Rhea and I are here today to talk about everyone's favorite topic, Scope 3 assurance. So the objective of today is really to provide some high-level insights as to how we as auditors approach a Scope 3 assurance engagement, with the idea being that if you understand what to expect from this engagement, then it will be a little bit less daunting when it's your time to prepare. So before we start, I thought it would be wise to call out that no 2 Scope 3 assurance engagements are the same. So the advice in this webinar is meant to be somewhat generic. If you do have more specific questions that you are struggling with, even if you're just at the beginning of your Scope 3 assurance journey, don't hesitate, obviously, to pop a question in the chat or reach out via email at any time. We do have readiness assessments and gap assessments that we've designed to kind of support you in preparation. for that as well. So I wanted to start today really just by focusing on this quote from ThinkStep CEO Barbara: supply chain transparency is the new passport to global markets. And I think this captures one of the key reasons why we are seeing Scope 3 reporting and assurance move from a nice to have to something that's in high demand across the supply chain and actively impacting market access and regulatory compliance. So we're seeing users demanding sustainability information to be more accurate, more comparable, and more rigorously audited. And obviously, as Katharina mentioned, the founding standards on GHG accounting are evolving to incorporate Scope 3 emissions on a much deeper level. So where is this coming from? And importantly, why should businesses seek Scope 3 assurance? We could talk about what's happening all day, but we've kind of broadly distilled this down into three reasons why. The first one being the most obvious and likely very topical and front of mind for everyone today is the regulatory expectations. So obviously in Australia and New Zealand, we have our mandatory corporate climate related disclosures, and those disclosures are expected to be audited. So it's no longer just about reporting emissions, but you need to be able to demonstrate methodologies and the governance in your data is defensible and stands up to scrutiny from auditors like ourselves and then regulators as well. Secondly, as I touched on the previous slide, we're seeing more demand from other stakeholders, from customers, investors, and boards for Scope 3 information. This is clearly linked to the new reporting requirements for Scope 3 emissions, but also as we start, I guess, accelerate this phase of transitioning from target setting to implementation, where a lot of large organizations and small organizations are really seeing more scrutiny on their Scope 3 targets and how they are actually going to achieve those reductions. Having audited Scope 3 emissions can also be a really good competitive advantage by being able to present this information to your clients. Thirdly, and often overlooked, is the opportunity to identify improvements. So the idea here is that good assurance doesn't just identify errors, it also identifies areas for improvement in your data quality, should help strengthen controls in your methodology to overall build a more mature and accurate Scope 3 inventory. And a common gripe we hear is that there's just this alphabet soup of standards and acronyms that can be challenging to wrap your head around. Often we have clients being asked to align with multiple different standards that can become very overwhelming. I won't spend too much time on this, but as auditors, standards are pretty much our favorite reading material. So I know auditors that swear by reading a few chapters before bed every night, but a helpful way to kind of think about these standards is in complementary layers when we're thinking about Scope 3 emissions, with the first layer being how emissions are measured, looking at the quantification standards, and then what organizations and what information is required to be disclosed. And then lastly, we have our auditing standards. So what are the assurance requirements and what process is the assurance provider following? So looking at that in a little bit more detail, we have ISO 14064-1 and the GHG protocol, obviously looking at the Scope 3 standard. And additionally, what's really important for Scope 3 is the sector-specific guidance. So a good example would be the land sector removals guidance. If you're in the agriculture sector, you want to be referencing that for specific guidance on your sector. Then we have our regulatory standards. So looking at the mandatory reporting frameworks in Australia and New Zealand, we could broadly also include voluntary frameworks, like GRI, into this kind of bucket. And then obviously our audit standards. So that's our favorite aspects. But these standards, they really set the process for what we as auditors do. If we're conducting a verification, we need something to verify against. And this is really the backbone of the assurance engagement. And probably interestingly to mention, in New Zealand, the assurance standard has been updated to align with the International Sustainability Assurance Framework, the ISSA 5000, which also aligns very closely with Australia's interpretation of that standard as well. So just like there are lots of standards, there are also lots of assurance providers. Not all are created equal. Different providers have different price points, different styles. So it can be worth shopping around to make sure you're getting the best deal, but importantly, the best service for your specific needs. So I've got some kind of common things to look out for. First and foremost is really independence, trust in assurance depends on the objectivity and the impartiality of the assurance provider so that they can provide an unbiased assessment of your disclosures. And this also kind of limits this idea of independence, limits how much an auditor can help you prepare your reports, because if they step over that line and they start advising, they kind of become at risk of verifying their own work, which obviously takes away from credibility in that engagement. So if you have an auditor that's giving you a bit too much advice, it can kind of create a bit of risk in the credibility of that statement. And a second consideration is competency. You want to make sure that the audit provider is familiar with greenhouse gas accounting and in particular scope 3 emissions. We often have clients who maybe engage their local financial accountant, which can be fine depending on the organization. It can be good for a quick review if they haven't got that greenhouse gas experience, but likely it wouldn't stand up to much scrutiny. Equally, we've had clients from working with some of the largest firms feel like they weren't quite getting the right experience and they're getting tick box statements rather than kind of seeing much benefit from the audit process as a whole. And that kind of leads us into this technical expertise, which becomes very important for Scope 3, where different industries have very different value chains. And you really want to make sure the assurance team understands the technical nuances of your sector to make sure you're getting the best advice possible. Finally, accreditation. This is really a process of where the assurance provider is themselves audited by an accreditation body, assessing their competence, impartiality, and internal systems. And this can be a requirement of some programs, but it's not always, but it can be something that's good to look out for. The key takeaway really is that you want an assurance provider that adds value, but that meets your specific needs. So if your key clients or stakeholders are predominantly overseas, there could be more value in engaging with an internationally recognized body. But just the same, if your requirements are purely local, potentially you would get your needs met just as well from a very local organization. So it's very specific to what you're looking for, which is why engaging the assurance organization can be really helpful if you do so early, so we can identify those areas. And just moving into the debunking audit slang section, we want to spend a bit of time breaking down some key audit jargon. Just starting very high level. Limited assurance is a lighter form of assurance, whereas reasonable is much more in-depth. Both levels provide confidence. One being reasonable simply goes further to provide additional confidence. So reasonable assurance requires more evidence, more audit testing, and overall more effort, whereas limited assurance is viewed as a kind of practical starting point, particularly for organizations early in your Scope 3 journey, as it can be lower cost and also more accessible. And that's why we frequently see reasonable assurance over Scope 1 and Scope 2, and limited assurance over Scope 3. And then as the data matures, we can move transition towards reasonable assurance, as is also required under the Australian Sustainability Reporting Standards. And verification versus validation. Verification is looking backwards, where we ask, did this happen? Validation is looking forwards, where we ask, is this approach reasonable? So in the context of Scope 3, if we are verifying emissions such as Category 1 purchase goods and services, we're testing historical information from the reporting year and kind of asking, do the numbers fairly represent what occurred during that year? Whereas if we're looking at Category 11, the emissions that occur during the use phase of a product, we're evaluating whether the assumptions and modeling are reasonable. So there's a slight difference there, and you can have both within the same engagement. And lastly, I just want to look at data quality and uncertainty, which are two interrelated and often misunderstood concepts that Rhea will likely mention a few times in her slides, so it's good to give a little description. And when we talk about data quality, we're talking about assessing if the data is accurate, consistent, and relevant, essentially looking at how good is the data. Whereas data uncertainty considers the level of confidence in the data, recognizing that even good quality data can contain variability, assumptions, and limitations. We will assess both during the audit. And for Scope 3 assurance, we really expect uncertainty. That's kind of part and parcel of Scope 3 assurance. But we want to understand Or I guess the question is, do we understand it? Can we quantify the uncertainty? And can we assess if it's been managed appropriately by the reporter? And we've got an example on the screen just showing that you can have high data quality and high uncertainty on the same level of data. And yeah, so this probably isn't the most exciting slide of the whole presentation, but we just wanted to give you an idea of what the overall assurance engagement looks like. Now, obviously, each assurance engagement is tailored to the client and the reporting requirements, but the overall process follows a very structured approach that is guided by the standards, such as ISO 14064 and ASSA 5000 that we mentioned earlier. And really from planning all the way to issuing the statement, this process is really documented in the standards. So it can be good to make sure your auditor is following that same process. And with that, I'm going to hand over to my colleague Rhea.
Yes, thanks, Mark. Hi, everyone. So how do we approach Scope 3 assurance? One thing I'd like to clarify is that the assurance process itself doesn't fundamentally change for Scope 3. So we're still applying the same applicable assurance standards, as we explained, the same principles that we would for Scope 1 and 2. At the end of the day, we're seeking sufficient and appropriate evidence to support a conclusion. So what changes in Scope 3 often is the criteria itself and the reporting context. So value chains that are more complex, often more complex in organization. And these would influence the decision around what we need to focus on during the audit. So as we know, for Scope 1 and Scope 2, most organizations have access to the information they need, and the data usually actually sits in their own systems. But in Scope 3, it is different. Companies rely on industry averages, their supply chains, models, and external databases. So that's why Scope 3 carries more uncertainty than Scope 1 and 2. And the approach is slightly different. So next slide is what one of the biggest misconception around assurance is that assurance providers either review absolutely everything or only look at the biggest emission sources. In reality, we follow a risk-based approach. So in a sense, it is a combination of factors that lead the auditors to design their plan around the greatest risk of material misstatement. Material misstatement is a fancy way to say that there's a bigger chance for a large error in an inventory. So maybe exceeding 5% or 10%, depending on what the threshold is set at the beginning. So what does risk mean in this context? As assurance practitioner, following the ISO 14064-3 standards, these questions are the principles of risk, which we can see now on the screen. So they cover completeness, accuracy, relevance, transparency, consistency, and classification. So understanding and rating those risk levels is what will help us decide where to focus on and dig further during an audit. The question is, does the materiality, so the magnitude of an emission, contribute to risk? Yes, it does. Because if we find an error that would likely contribute to a large variance to the reported figures, the focus is on the material emissions. So, and does uncertainty have a higher risk of misstatements? Yes, it does as well. As much as uncertainty is expected, the question is, do we understand it, and has the organization taken reasonable steps to reduce it? So at the end of the day, there's a higher risk. When there's a higher risk and the emission is material, assurance providers will naturally focus more attention. So evidence, how much is enough? The short answer is it depends. There's no standard checklist that says provide, say, 10 invoices or review 20 records. The amount of evidence required depends on many factors. We talked about it. We talked about the criteria previously, the assurance level, so the level of the audit effort, limited or reasonable, the methods used, spend-based, hybrids, supplier-specific, and the source. Is it forward-looking? Is it historical? Are we doing a verification or validation engagement? And materiality, of course. The risk level as assessed, as discussed previously as well. So the combination of these will result in what type of test we decide to do as auditors. Could be sampling, could be reconciliation. And it's important also, as we said before, there's no two audits that look exactly the same. So even highly competent assurance practitioners with similar qualification may apply a different judgment call when determining the extent of testing and deciding what additional evidence is needed. So auditors do ask a lot of questions. It is expected. We need more evidence. And if we do need it, we'll ask you. But you'll be surprised to hear that we'll often find rather than missing evidence, it's missing explanation of why a certain approach was taken. So a good way to start is, and we'll give you more tips soon, is to have a clear and transparent data trail. Document your assumption, your processes, your calculation, and keep all your records handy. So let's bring some practice examples. So here we have I know we need to wrap up soon, so I'll go very quickly on that one. So we'll use category 1, purchase against services. This slide shows that we're reporting. So this is a spend-based reporting, and this is the types of question we'll be asking if there was only spend-based reporting. So basically asking about the emissions factor, the alignment, if it's temporary, geographically aligned, and we'll practice some testing that are about internal reconciliation on the spend values and the control use if there was some checks done internally as well. In the next slide, we can take the same construction company, but this time it has evolved in its Scope 3 reporting, and it is using an EPD from the EPD database. So this is much more specific, and we as auditor will have to check about if that actual source of data, which is the EPD itself, is reliable. Has it been done according to recognized standards? Has it been third-party verified? And if it is current. We'll also test the company's weight of purchased steel, and this is by for example, tracing back the quantities to the procurement records, for instance. So one of the most interesting outcomes comparing those two examples is that the focus on the evidence gathering is different. So as companies evolve, their Scope 3 reporting those year-on-year changes are very important and to be reported and clearly, transparently disclosed for review. The last slide, as we wrap up, we'd like to leave you with some tips, and we are very happy to share them later on as well, to make your assurance process more efficient, which often means less costly. So first and foremost, document your approach. As Katharina said earlier, a documented process, an SOP, is a great starting point. Second point is organizing your Scope 3. So as per the standard, this is repeating again what Katharina said, please disclose your methods used, your source, your emissions factors. We want to see your assumptions and estimate everything for every single category of your Scope 3. And this will be very important at the minimum to check for the audits. And the next point is that whether you're using Excel workbooks or a dedicated measurement platform, evidence should be transparent, traceable, and clearly labeled. So if someone could independently follow this calculation all the way back to its original source, then you're already in a good position. Track and explain changes year on year. We've discussed that earlier, and conduct an internal review. So challenge the inventory yourself. We'll apply a risk and materiality lens to your disclosure. Use these risk principles that we have presented earlier. Review the completeness of inventory and investigate your unusual movements. And finally, engage your assurance provider as early as possible. So if this conversation happen early enough, that we'll have a much more streamlined audit. So I'd like to wrap up with it's helpful to think that assurance is not only a compliance exercise. The real value often comes from identifying opportunity to strengthen control, improve data quality, and increase confidence in future reporting. Thank you all.
Thank you very much. Let's start our Q&A session. We received quite a few questions. Given the time, we probably won't get through all of them, but we will get back to you if we don't cover your question. One of the first questions I might answer briefly is, we've got a question, was wondering if we think that the EQ standard that's currently under development for voluntary GHG estimation and reporting, where does it fit into that landscape? My understanding is that it is very much aligned with the GHG protocol land sector and removal guidance, but has some specific elements to Australia, for example, using the national greenhouse gas emission factors, but it should fit into the GHG protocol suite of standards. Maybe another question we had was, and that's maybe for you, Mark, what are the most common areas for improvements you see from your clients with respect to Scope 3 assurance? It might be quite useful for others as well.
Did you want to take this, Rhea? Or, I mean, I can start. One of the key, I guess, areas is, as we've mentioned, and I think some of the polls at the beginning with the different percentages of the documentation in the SOPs, it's really about, I guess, justifying how you came to the conclusions. What we often see is we'll really be concerned with the data in the reporting, and then maybe when you go to assurance, maybe it's a few months' time since you really finalized those calculations, maybe then it can be a bit hard to actually go back yourself and link and say, oh, hey, how did I actually calculate that? What meters did I rely on? And, that can be quite tricky. So that's probably one of the areas we see. And I think, just spelling things out really clearly can be very helpful. So even if you think something is quite obvious, just spelling it out in a really simple way is something we see very often. Rhea, did you want to add anything else?
You've covered it.
Perfect. There might be one more question coming your way. Talking about how you prepare your inventory, is it always better to have a carbon management tool, or is a well-managed Excel spreadsheet still fit for audit purposes?
I can take this one. So yeah, I've seen both. I've seen very, very well organized worksheets with links to formulas, to the sources, great tools used, and also I've seen platforms where the data was quite hard to find from an audit trail point of view. So either or, make sure that the information is available, and also take it from an auditor's lens, as we explain how we see things. Try to see how it works from a data and data trail and audit trail point of view.
So sometimes carbon accounting platforms can occasionally be a bit like a black box where numbers go in and something comes out the other side, and it's really hard to connect through that journey. So some tools are really great for showing that. So it's just about making sure when you are going with a platform that they have audit readiness in mind, because some platforms are built like that, others that's an afterthought.
Perfect. Thank you. I think we might leave it there, and if there are any questions that we haven't answered, or there's some, we will get back to you afterwards. I just want to take the time to thank our speakers. Thank you so much, Mark and Rhea, for joining us today, and thank you to all in the audience. We really appreciate your time. We have a couple of other webinars coming up in the next month. We're releasing another update of our spend-based emission factors if you are interested in that one, and we're also having some of our LCA experts together sharing their feedback from and learnings from doing hundreds of LCAs across products, industries, and continents. We've also put together a disclosure kit, if you haven't seen it yet, to help with the Australian climate-related disclosures. So it covers some of the emissions and metrics we've touched on today, but also governance, risk, opportunities this side to help you to ensure you have the full set of required disclosures ready. So if you're currently mapping out your reporting journey, this might be a helpful template for you. So thank you all, and have a wonderful rest of your day. Bye.
Thank you. Bye-bye.
We have many more webinar replays on a whole host of sustainability topics. You can check them out on our website and our YouTube channel.